Hi, welcome to Kingdom Heirs Book Club. I'm excited for this book. It's called How to Make Money Selling Stocks Short. I have been a investor that would buy at a low price and sell it at a higher price. And so I wanted to learn how to do it in the opposite direction because I was unaware that you can make money going both ways. And so for those that are not aware and just meeting us for the first time, welcome. We play the cash flow game every Sunday. You're welcome to join us. But in the cash flow game, that's how you start your investment journey. You're working a job, 9 to 5, you're getting a paycheck. And so you have to do things that are over and creative outside of your paycheck. And so one of the things that I like to do is buy stocks. And so there's this card that comes around where you buy, it's $1 stock, but I buy 1,000 shares. And so it's a short-term investment to give me some money that I need to get to my larger investments. So that's when I came across, I had this book for many years, and I would start reading it and then I would put it down. And so by playing the game and doing that strategy on building my portfolio, financial portfolio, this book has come back around. And so I was listening to a podcast, and so they had a guest on there, and I'll introduce you to her as well along while we're reading the book. But she gave me an idea of how this works, because, I also invest in real estate. And so I like to learn like at least 3 strategies or more in each category, whether it's in real estate. Now, here's another strategy for stock buying. She referred it to or compared it to wholesaling. And wholesaling is a person, you have no intention of buying the house. And what you do, you're the middleman. You go and you put together a buyer and a seller. And when you do that, you make money. And so you go to the seller and you negotiate the price to where a price that they're happy with. And then you find a buyer that will buy it at a higher price. And then you get the money difference between what you negotiated and what you sold it for. And you never own the home, you never get the keys, you don't have the responsibilities of owning that property. So when she gave that analogy, that was like a light bulb for me, like, okay, I got it, or I get it. And so one thing I like about William O'Neill is that they give you the strategy. Not only that, they have resources, they have a website, they have different things that you can definitely be successful in your investment purchases and that sort of thing. So let's get started. And so today we're going to talk about how to make money selling stocks short. Some key points. We're going to talk about the markets. We're going to look at just some basic, I'm going to keep it simple. We're going to look at a chart, the daily and the weekly. We're going to, the book talks about basis and then timing. And so what goes up must come down. So even the great leaders in the stock market, those stocks don't always stay at an all-time high, although you can definitely buy a stock like the Walmarts. There's people that have, stayed. I mean, the longevity of it growing. So you can find some companies where there's a long journey in the growth and take advantage of the growth. But eventually a stock price will come down. And so we're going to learn how to go in and what to look for, indicators of what to look for, when to get in and when to sell and make a profit. Now, short selling, a short sale is one in which you sell a share of a company's stock that you do not own. So what you do is you borrow the stock certificate through your stockbroker. So you need a brokerage account. And all you have to do is go to online. And, you know, at one time you actually had to go to Schwab's or Fidelity or I want to say Smith and Barney. That's who I have. But of course, there's always mergers and name changes. But, you know, you would go to a big brokerage and you would get a stockbroker and they would do the transaction for you. But nowadays you can go online, you could do the purchases yourself. And so all you have to do is go online and Google the top 10 online brokerage and go through and see what they offer. And if it meets your needs, then by all means, you can set up your own account. Also, it's the opposite of buying low and selling high. It's the opposite. So now you want to sell first and buy back later, hopefully at a lower price. And to set up the type of account you need for a short sell is through a margin account. And that was another thing that kind of stood out for me. That was kind of scary, like, oh, I don't want to borrow any money to, you know, sell short. But again, it's best to get educated. And that's what I always recommend. At the end, I'll share how you can get in contact with me. We have a Facebook group. I always encourage people to do your due diligence, do the research. You know, everything has a blueprint. And so this is a book on the blueprint. And you don't want to start with this one book. If this is something that you're interested in, you know, find other books on short selling. There's plenty of videos out there. William O'Neill, they offer educational classes. I know that I've been to a lot of free classes that you can partake of. So you definitely, and there's the lady that I'll introduce you throughout the process. You know, she has online classes that you pay for because you're not gonna, you know, always get everything that you need for the process through a YouTube video. There's no way you could do it. But if you take a course, they're going to outline, you know, 6 steps, 7 steps that you can follow. And then you want to practice. I don't recommend that you set up a brokerage account and then tomorrow start short selling. As soon as we finish the book, start short selling. No, get into an account to where you can set up a dummy account, choose some real stocks to short sell and play around with it for a year or so. And then once you start seeing that you're making great selections, your timing is on point, and you see that you're making money in your dummy account or similar account, then go out into the real world and have at it. Now there's multiple ways of making money. Again, every day in the stock market, there's people that buy low, sell high, and there's people that's making money when the stock market is price is going down. So every day somebody's making money. And so there's multiple ways. So if the market is doing well and it's strong, then okay, you know what side of the market to be on. But if there's a decline in the market, you know, you don't have to sit around and lose all the money that you gained in some of your purchases. You can sell them, make money while it goes down, and then buy it back when it's going up, you know? So you just learn different strategies, you know, so you're not sitting by watching your money, especially in your 401k, you know, sit there watching, you know, oh, I had a great 5 years and this 6 year, the market is down, I'm losing money. You don't have to sit there and lose money. You can move it around to where you keep your portfolio strong. So let's talk about the market. There's the bull market and there's a bear market. Now, a bull market is a strong market. Companies are flourishing. You're getting, you know, you buy a stock at $10. Now it's worth, well, I'll just use my own. I purchased Facebook when it first came out. And Facebook started out at like, I think I got it at $38 as an IPO. Now, as of today, the price has dropped. It was like over 300, but I'm just checking the price, current price of Facebook today. Let's see. So as of Friday, the price was $200.06. So from $38 to $200, I've made money on the rise of Facebook. Now the bear market is usually there's panic, there's deterioration of basic conditions, unusual specific events. And I would say that, you know, war that we're currently facing in Russia and Ukraine, those are unusual events. And that, as you can see, the stock market is being affected by it. Panics, like, you know, sometimes something happens where, like the COVID, that's definitely has affected the stock market. So we're looking for a bear market to really take advantage of making money as the stock's price comes down. So I pulled the daily charts and I also pulled the weekly charts. So according to the book, those are the charts that we will look at. Reading the charts are so important. And so not only, so if you are not a stock buyer, but you buy crypto, you can still, by learning how to read the charts, you can use that same knowledge of reading and understanding the charts. You can also do that with crypto as well. So you'll see that some of these things will just roll over into other investments. So I'm just gonna decrease my screen and pull up the actual. Okay, so here's a daily chart. And so it tells you a breakdown of what each line means. So like number one is the price. The price area shows daily changes in the price. So tomorrow, Facebook could be it could be $199 or it could be $250. So number one tells you, it will tell you the price of the stock. So to the right of the chart, which is over here, is the price. Number two, which is down in this area, those are the volume bars. So the vertical bars in the volume area indicates the volume in the number of shares that is traded in the stock. So down at the bottom, those are the banks, those are your pensions, your mutual funds. So those are huge, large accounts. So like if you have your 401k would be down at the bottom. So if there's banks just selling off this stock, or mutual funds, because mutual funds usually is a collective of companies. And so say like your 401k has this particular stock in the portfolio, but they're selling it off, that gives you an indication. So the red lines is the sell-off, the blue lines is purchases of the stocks. So that's something that plays an important role. So if you have the large 401ks and the mutual funds and the banks that are selling this stock like wildfire, why would you stay in if the larger institutions are selling it? So that's an indication. The number 3 is the moving average line. So it's the horizontal line. So you have your 200-day trading days and the share price over the 50 trading days. So you can look over these lines and say, okay, well, this one and then the red one. So over the last 50 days, you can see your stock like, you can see the movement of it. Has it been going up or has it been inching down? So again, this is something that is relative to your decision on whether or not you want to buy it. And then number 4 is the line compares the price movement of that particular stock to the price movement of the S&P 500. So it's showing you, according to the S&P 500, you see the S&P 500 is on the rise, and you can see where this line has fallen. Well, this one is the 200-day. So if you see that it's getting close to the line or falling under the line, you know that it's getting weaker versus if it's keeps rising above the line or staying consistent with the line. That tells you something there that is strong going up. But we're looking for stocks that are falling in price. And then I want to show you the weekly, which is very similar. The only thing there is that number 1, again, shows the price of the stock. So if you look over here to the right here, we have on this day, down here is the lowest price that stock fell. Because if you notice from the day, sometimes there's movement before the stock market opens. And then from the time it closes, it's either going up or down because you have buying and selling going on. And so when it's close to the high price, that means that the sellers the buyers are the ones that control the price, that kept it close to the high point versus the sellers. Like if the line was red, that's letting you know the sellers was stronger in the movement of the price for that day for the stocks. And so on the close of the day, when the market closed, it stopped right there on the line. So throughout the day, this was the highest in price it was, and down here is the lowest price it was for the day, and this is where it ended at the end of the day. So let's say on this day, you said, hey, the price is going to drop, but it actually stayed strong. The buyers kept it moving to the higher market mark, not market, but mark. Same here. Number 2 is, again, the institutional buyers. And you can see how it's pretty much, you can see here it was kind of low, but then it was going kind of high. You could tell here that this went over. Now this one is a 10-week. So over the 10 weeks, it was strong here. And you can see here, there was a large sell-off here. There was a large buying here. And then 3 is the moving average line, which is there. And again, this one consists of 10 weeks of trading and or 40 weeks of trading. So there's this red line here and this line right here. And then number 4 is relative strength line. So that's this one in here. So just to see it in a bigger light here and with the magnifying glass. So as you can see here, this almost touched the line. But you can see it was a big sell-off here. So you can kind of like go down and say, okay, you know, if you see a lot of red lines versus the blue, I mean, that's telling you something. And then one thing that I know too is that, you know, when they start selling off stocks, it's not like one big dump. They gradually start selling it off because that would just cause the market to react in such a crazy way. So they have to, you know, sell so many stocks at a time, but at least you know that that day there was a sell-off. And those are things that you're looking for when you're selling short. And this is the weekly one. And again, to see this a little bigger, there's the highest that the price went for that day. Right here is the point in which it was the lowest, but when the market closed, it stopped there. So here you see the same thing on this line. That was the highest it went for the day. That was the lowest because there's movement all day long. There's buying and selling all day long. But then at the end of the day, it topped right there. Now, one thing about being successful in short selling, it takes time, it takes discipline, and it takes patience. So you're not gonna, some of you may start off right out the gate making money. I know that this Terry, I believe her name is, she, you know, she has people making $1,000 a day. So can you imagine in 30 days, you can make 30 grand. And again, it's a shorter investment process. So there's the long term and then there's the short term, not overnight, but a shorter term. So if you need money to, like, say, you want to buy an apartment building and you need a down payment and you know how to go in there successfully short sell stocks, well, you could take a month or two, even if you made half of that, $500 a day, or even if you made $1,000 a week, or if you made $100 a day, that's still adding to your bottom line. So that's adding to the money that you bring home from paycheck to paycheck. So you could say, well, my money that I bring home from my job that takes care of my basic needs. Okay, so this other money is going to go towards that dream vacation I want, or that property I want, or that summer home that I want. It would get, you can make a determined amount of money in a short period of time. So, but again, I don't think it's going to happen overnight, but it will definitely, with time and discipline and patience, and you get it. Like, say that same person that teaches that class, she makes $1 million a day. So you can definitely change your price, but it's whatever your needs are, whatever your desires are, whatever monies that you need to accomplish the things that are on your vision board. So if you want to retire early, or if you want to travel the world, take off a year and travel the world, you count the cost. How much is this going to cost me? Okay, so if I take time out to be disciplined and patient, and have a strategy and follow the steps, because usually if you get like a 6 or 7 steps and you only do 4 out the 6, it's going to fall through. But if you take your time, it's best to just do it off the bat from the very beginning. Start off following the steps, putting in the time, be disciplined, be patient. Then after a while, you're like, okay, say if my goal is to make $500 extra a week, that's $2,000 extra a month. Multiply that by a year. You can easily do it. And if you get good at it, say, okay, I need to make $1,000 a day because I need a $30,000 payment on this business, or invest in. So you can definitely upgrade your investment, because like I said, in the game, that's one thing that I learned, that you're doing smaller investments. So say, you got $6,000, or under, you can take that $6,000, put it into the stock market, buy, do short selling, and then that would take you to your next goal. So, okay, now I have made 30,000. I made $1,000 a day for 30 days. I can now take 30,000 and buy a 10,000 or greater down payment investment. And so again, you're just making steps towards your goal, your dreams, and the life that you're trying to live. And so this is what you have to do. You got to put together your financial portfolio. That's exactly the books that we'll be reading this year will be books like this, strategies that will get us to our destination. So there's some people that, then you'll find your niche when you have like more than one strategy to use in the stock market. And again, like I said, you could roll over your knowledge that you're learning now for selling stock short and apply it to crypto, because there's charts there too. So you can then roll over your knowledge there and be a better crypto investor. So again, whatever your desires are, you go in there with a strategy. The economy is trending up, then you have a strategy for that. If it's going down, you have a strategy for that. So that way you can make money in any economy. That's the whole purpose and goal. So I have a short little video. We're not going to watch it all because it does. I'm just going to play the part 1 that we read for this book title. And so this will give you a visual for those that are visual people. So let's go ahead.
William O'Neill, founder of Investors Business Daily and author of the book featured in this video, How to Make Money Selling Stocks Short. Stocks have a bias of increasing over the longer term, and everyone has a story of a stock that has made a significant profit. But as the saying goes, what goes up must come down, and often with a bang. William provides detail on the anatomy of a short sale and provides many examples of making huge amounts of profits from selling stocks short. Let's take a look. We present How to Make Money Selling Stocks Short. In 1963, William O'Neill bought a seat on the New York Stock Exchange, and a year later, he started the firm William O'Neill and Company. And 20 years after that, he founded the highly regarded Investors Business Daily. Throughout this period, as you might expect, William O'Neill brushed shoulders with hundreds of investors, portfolio managers, and institutional clients. He found there was a clear lack of knowledge regarding the selling of stocks, and much less when selling a stock short. In fact, he concluded that there was a severe psychological block in anything other than buying and holding stocks. William says, Buying without the ability to sell is like a football team that is all offense and no defense. To win, you must understand and execute both. A short sale is where the stock is borrowed from a broker and sold straight away at the market price, in the hope the stock can be bought back at a lower price in the future. This is the opposite of a traditional buy low and sell high strategy. Let's look at a quick real-life example before we move on to the technical aspects of a short sale. David has a mobile phone with a value of $1,000. Dangerous Derek approaches him and politely asks if he can borrow the phone. Dave replies, "Sure, no problem." A few moments later, Derek is seen selling the phone to a passerby for $1,000. A week goes by, and Derek finds the same model phone in the shop window for $800. He purchases the phone and returns to Dave to give it to him. Dave has his phone back, and Derek walks away with $200 profit, the difference between the $1,000 sale price and the $800 purchase price. The risk here is that if Derek had to buy the phone from the shop at a higher price, he would have lost money. Therefore, the challenge is to sell the asset at a high price in anticipation that the price will get lower shortly afterwards. Let's look at this from a stock chart perspective. The trader in question was advanced enough to notice a head and shoulder pattern within this chart. He could see two inflection points, which created a support line. And the price has extended way above its moving average line. The trader kept an eye on this support level, and once the price cut through support here, he borrowed shares from his broker and sold the stock short immediately. The price drifted down as he anticipated, and the trader bought the stock back at a lower price, around the moving average area. Therefore, if the stock was sold short at $10 per share and bought back at $5, the trader's profit would have been $5 per share. Let's look deeper into the technical aspects and see some examples provided in the book. William O'Neill says, "It is best to time your short selling with the action and movement of the general market averages. After they show definite signs of weakness, only then does it become a question of selection and timing of the individual stocks to sell short." We see here the example of the Dow Jones Index in 1984 and the characteristics discussed by William. Points A and B show signs of distribution determined by lower closing prices from the previous day and high relative volume for each of those days. William says when you see perhaps 5 distribution days within a 2 to 4 week period, it is time to start raising cash. There are, however, further key points to recognize prior to determining that the market is heading downwards. Here we can see several distribution days. These pushed the price through its 200-day moving average. Additionally, although not pointed out in the book, we can see the price also broke through a rising level of support. This would be an ideal point to look for individual stocks which are ready to sell short. The rest of this video will be focusing on just that. William O'Neill
So that was a good illustration on a visual on how the short selling takes place. And so just some final thoughts just to keep in mind. And let me just quote that talks about from the book. And it says, buying without the ability to sell is like a football team that is all offense with no defense. To win, you must understand and execute both. And so sometimes people get emotionally tied to their stocks and they just keep them forever until it dwindles down to nothing. And so you definitely don't want to take that approach, because the reason why we're investing is to make a profit. And so if we gain a profit, but yet we hold on to it forever and then we lose the profit, that defeats our purpose. And so one of the things with the short sale, and I'm sure it will come up again, is that you can set parameters, and definitely you want to set them for short selling, because let's say that, you know, they borrowed the phone, sold it for 1,000, but then when they bought it back at 110, now you owe $10. And so you want to set a boundary that owing part is not more than what you can pay back, because that's when you'll get into a pickle. Sometimes we're like, okay, it's going to go down much further, you know, set some boundaries. It said 20 to 30%. That way you can go in and you can make a profit. The whole trick is to make a profit. So sometimes, you know, you may feel as though it's going to drop lower, and it may drop lower. Those are the chances that you take, but, you know, begin to not be emotionally tied to the stock, begin to be able to let it go and be okay with it. Because that's one thing about the stock market, you'll have many other opportunities. And so don't go in with the fear of missing out. And also use your resources. So this is a resource source. So you want to read the book, and then when you come across, like, it has nothing but a ton of charts to of companies where selling short was successful, and, you know, study those charts, begin to identify the patterns, because that is the key thing, and know when to you know, make your move. And don't run with the crowds, because you're going to hear the news, you're going to hear people at work, you can have friends and family, or you'll hear like, oh, everyone is buying this stock, they're shorting this stock. Like, go in and look at all, you know, your resources, do your steps. And if it doesn't meet the criteria, then don't be that person that follows the crowd. Usually if the crowd is going this way, I'm like, you know, hey, wait a minute. I know at one time, a couple of years ago, people were like, oh, buy gold, 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 which I buy gold and I buy silver, but the gold price was like over $2,000 for an ounce of gold. And then silver was only like $13. So I bought the $13. I was able to get more coins than I would with just one gold coin. I had multiple silver coins. So, you know, there's tons of companies out there, and you don't have to be a part of them all. If you have one, that's good. You found one that is successfully that you can short sell and make money, then you're ahead of the game. So don't overwhelm. It can be overwhelming. So don't overwhelm yourself. And so I will open the floor for questions. If you're watching the replay or watching this video on YouTube, you know, ask your questions down below, but make sure you get the book. Let's go over it together and participate, because, you know, that's how I really learned how to invest, was getting into an investment club and just hearing different people's perspectives when we would present a company, and just hear the different perspective that gave you a wide range outside of what you grasp. Because I could read this book, you could read this book, and we walk away with different, the foundation of it would be the same, but depending on the season that you're in and the goals that you're trying to achieve, you know, you're going to grasp the things that you gravitate to. And so, but when we sit down and just share and talk about companies and is this a good short sale? It's good to, there's no right or wrong to it, but it definitely helps you grow as an investor. So I just thank you all for coming out to the book club and taking an interest in this book for sure. There's ways that you can contact me and stay connected. We do have a Facebook group. I'm in there every day. And so it's more contact. I offer one-on-ones. If you need a consultation, by all means. Again, my name is Renee, your wealth coach, and see you. I think I'm going to do this. I'll check with my daughter to see if I advertise every other week getting together, but I may just next Saturday, we'll do part 2. Okay, we'll address that when we advertise it. So bye for now.